The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 16th. Fantastic Friday edition of today's Trader's Edge show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, inside the Tiger's Den. A ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Last weekend, almost last weekend of full shopping out there. I guess today being the 16th, you can do more shopping next Friday and Saturday. So that's not exactly true. But let's go ahead and get this show started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 12 points at 19,839. The S&P off 5 at 2256. NASDAQ Composite down 21 points, about 0.4% to the downside. Not the leader to the downside. NASDAQ Composite off about 17 points. Russell 2000 up 4 points out there. Something to think about. You've got the semiconductors down 0.9% basically, off about $8. New York Stock Exchange basically flat, down $5. Wilshire's down 28 buckaroonies out there. The number to be watching inside the Wilshire is going to be 23,619. It's trading at 23,608 out there. You close below 23,619. The Wilshire 5,000 will be generating a sellish type signal for us. So where that closes today could be a clue. You've got the gold trading up $7 right now. Silver's up 23 cents. Light sweet crude up 80 cents, trade at 51.70. Leading the charge to the upside, Chipotle serving it up, $8.60, 2.25%. Essex Properties up 6%, about nearly 3%. Ulta Salon Cosmetics up about $6. Acuity Brands up 4. Tesla up 350. Cormark Holdings up 350 as well. To the downside, Priceline off $27, trading at 14.74. Agios Pharmaceuticals down about 20%. That's off $11. Google's off 6. Nordstrom's is down 8%. That is off 4. So we can cover any of those stocks, anything else that you'd like out there. Just give me a call, send me an email, whatever it is. That is going to be the easiest way for you to get in touch with me. So let's begin the day. Well, let's begin the day by answering a question. We already got some pre-emails out here, and one of those emails was asking about that correlation between the yen and gold and the yen and bonds out here. And I posted this chart earlier, just shortly after that question came in case the sender happened to be inside the Tiger's Den. Now, this is a 10-minute chart here that you and I are looking at. The very top panel of the chart is gold. The very bottom panel is the yen. And the center panel is the 30-year Treasury out here. Now, if you can follow my crosshair out here, and if you look at just simply candle by candle by candle, you'll see that directionally, I mean, it could not be more clear that the three of these are doing it can't be a Texas two-step. Of course, a Texas two-step is the yen is dancing with the bonds, and then the yen decides also to dance with gold out here. Steve-O's belief is it's all about the yen out here. And you just look at candle by candle. So is there a directional correlation? You bet your sweet bippy there is. What is a sweet bippy? Who was it that said that on Rowan and Martin's Laughing? Was that Artie? What was that guy's name? Artie, what was it? Artie. I think he was, right? Maybe it wasn't him. Maybe it was Rowan or Martin. But you bet your sweet bippy out here that there is a correlation between these two. I mean, it could not be more clear. So that says, in answering anytime you have a question out here until this correlation goes away, and you're wondering, Dick Martin, okay, thank you, it was Dick. And if you're wondering, hey, depending on what time frame it is you're trading as well, what should you be doing? That means you don't have to trade yen futures. You don't have to trade the yen U.S. dollar currency pair out there. But by goodness, if you're going to be in either of these instruments, there we go. I knew I could get it. If you're going to, but what is a sweet bippy? That's the question there, Mike. Maybe I shouldn't have been asking that question out here, but I don't even know the answer. But if you're going to be trading either of those instruments, you really need to know what's going on inside of the yen out here. It just could not be clear. And yes, I believe the currency pair is the larger of the group out here, and that's why I say it is the one that is controlling the world. So, hey, you know what? We're starting to see a pullback here, right? You saw gold move higher. It's trading sideways to pulling back, the yen really doing the same thing. It's all going to be about this first retracement or this next retracement and whether or not the highs get taken out and this starts to form an A to B equals CD to the upside. Really on all three of these instruments. There's no A to B equals CD short term out here inside of the T-bonds out here, right? So it's really, if there's a bottom that's forming, all you have to do is just come over to the short term charts and wait to see if in fact we get an A to B equals CD to the upside. Now, those can eventually fail because on a market that has just moved simply from upper left to lower right, here I'll just pull these charts, we'll just scrunch them. We've had a few A to B equals CDs to the upside that have formed. Take a look at bonds, only to then get crushed and move back to the downside. So they can also fail because they're forming these little Gartley sell patterns is what it is. It's when those Gartley sell patterns start to fail or the retracements don't form a lower swing point compared to the previous lower swing point. You start to have that stair step to the upside. That's when you know that the trend, or one of the ways that you know that the trend has changed out here. So that's what Bippy is, a euphemism for your backside. Okay, well, now we know what a sweet Bippy is. Thank you, Tucker, for that inside information. Okay, so that want to be able to answer that question out there. Let's take a look at what's going on intraday. Let me see if we can figure anything out here. Intraday. Well, intraday, let's just simply go to this chart here. Let's go take a look at key pricing levels out here for each of these instruments. Now, it is, in fact, the ES Mini that I'm most not concerned with, the one that I'm keeping an eye on, and that's 22.49 even Steven. That number is going to get hit and tagged. The question is going to be, is price going to bounce off of that level? At the end of the day, and you know I hate saying at the end of the day, is the ES Mini going to close above 22.49? If so, the bullish outlook remains intact. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so one of the other questions that came in before the show had started was, is there any chance that the S&P 500 is making a major top? I acknowledge that I've provided upside targets in the 2,500 area for the S&P, and listens to the show all the time. Begs to differ with that call, that's what makes a market. You've got to have two sides of the trade, all right? If you're buying, somebody is selling, and vice versa. And so the question is, is there any chance that I can go find a signal that the S&P 500 is making a major top? That's really what the emphasis of the email was. And so many years ago, so as I went through my evolution of technical analysis, it's never a last piece, but one of those big pieces that I took a stab at was, and it's always, I know you do the same thing out there, we're always trying to find a competitive edge, right? A competitive edge is a good thing to have. And so I started reading all of the books, those that Larry Pesavento has put out there, and many others with regard to trying to find something in the stars, something in the sky, something in the planets out there that would give us because we know those positions well in advance. So was there something that identified every major market top out there? Is there something that was taking place at that time? So I spent a good amount of money, a extraordinary amount of time plotting all that. Now, the time plotting it was I just digitized 300 years worth of the ephemeris out there so that I could take any aspect that I wanted and immediately apply it to a chart and see if there was some consistency there. I couldn't find it. I discovered something else, though, and I gave that 2249. That discovery is worth more than all of I've recovered all of the time and money just from that one discovery alone out there. So that was a beautiful thing. Remember, things happen for us, not to us. Again, of course, as I had gone down that path and said I couldn't come up with anything consistent out there, I was depressed. And you can guess for how long out there. It couldn't have lasted more than 5, I don't know, seconds or so, because that's not a good thing. Instead, you just open your eyes and say, well, what am I missing here? Well, look, one of the other patterns that I had identified back then was, and we're looking at a monthly chart here for the S&P 500, and I took the Dow all the way back. I had the data through 1920. I don't have that chart here to show you. But what I identified that takes place at those market tops is a consistent pattern. And that's the beauty of it. It's consistent, is that price moves higher and does it with less relative strength. So just as an example out here, back at the 2000 top, price was moving higher, gave you that nice reversal signal here, nice little dark cloud cover, follow through thereafter. That ended up being the top. Now, I'm interested in the tops, not the bottoms. You'll see the lines. You'll see my system start drawing lines from, a swing point or a candlestick, really where the relative strength makes its highest high out here. Price continues to move higher, but the relative strength index is making a lower high. Well, you might say, what does that actually look like? I guess I should show you what that looks like, right? How do I do that out here? Come on, move your way. There we go. So here's an example. Here's where, if you take a look back, it looks like December of 2000, and what was it? December. Well, come on. What was the actual high came in? Looks like December 1999 was when the relative strength indicator right here had made its highest high. But you see, price kept going higher, but the relative strength index did not. All right, that was the signal came when we got a bearish reversal signal. Once that actually started, we did not. You see, it really didn't start, and this is part of the system that I have developed out here. This is the proprietary part. But if we take a look at where that real counting starts out here, it didn't start until June of 2000. And it was back in October of 2000 when at the end of the month we had that confirmation of a potential very significant top that was out here. Now, the same exact pattern took place in 2007. All the way up on a monthly chart in 2007, there was only one period of time, which takes you back into October, September of 2006, where price was moving higher, doing less relative energy. But you see, that alone is not the signal out there. That's what markets do. They resolve themselves, or they can resolve themselves, just as the S&P 500 did back here in October, November. This crosshair is kind of weird. I think it was the month of October when the S&P just blew past that, and that's why you don't see another line up there. However, back when we got to the highs in October of 2007 inside of the S&P 500, that pattern arrived again. And on that very next session out here in November, that's when you saw a bearish reversal signal, the bear sash candle. Now, fast forward to where we're at today, because as of last month, the answer was yeah, and I kept watching it and noticing it because price was moving higher with less relative energy. So that is through November of 2016. And I would have answered the question from that viewer, listener out here, if he or she, it was a he, by the way, had asked at the end of November, was there a chance? And actually, there still is a small chance, but I'd say not really out here, because price now in the month of December has moved higher. It has moved higher, and guess what? It has eliminated that with less than relative strength. So it's moving higher. That pattern no longer exists. Now, if we did see a total sell-off, which could occur, right? It's only December 16th, and we get a bearish reversal signal, which would mean a close below last month's open, then I would change my mind out here. But that is not the pattern that is in place as we speak right now. And as I say, as I took the Dow information as well and went all the way back into the 1920s and plotted this information out here, that's what was identified at all of any kind of top. Could be major, could be a minor out here, where you begin to see a retracement inside the S&P 500 as we speak right now. We just don't have it. Does that mean that the market can't, form some type of short-term top? No, of course it can. The market can do anything it wants. But I just wanted to share with you what I have found as the most consistent pattern out there. That is why you and I pay attention to it on intraday charts and other time frames, because we know that is both topping and bottoming signals out there for us. So as we speak right now, you've got the ES Mini made its way down to that 22.49 level. The actual number that it hit looks like probably 22.49 and a quarter. Don't ask me how that works. I just know that it does. And the actual low so far, 22.49 and 2 ticks and 50 cents out here. So as long as price stays above that, it says the message at this moment in time is to be long, and that all the market is doing, by the way, is just moving sideways, working off an overbought condition. You might say, what the heck does that mean? I think I put that chart somewhere in here. Where is it? Okay. So if we take a look at the overbought condition, we had the relative strength indicator, by the way, make its highest high that we've seen in quite some time back on December 13th. The actual closing high of the relative strength indicator was 77.57. Some people would call that a overbought condition. Yeah, it could be. And in fact, overbought conditions that just work themselves off sideways are nothing more than like a cobra just winding itself up, getting ready to strike and make its next move to the upside out here. And unless that 2249 area gets breached, that's really what the S&P 500 is doing. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. That was off 23, S&P down 6 points. So a question comes in from Tom. Good afternoon, Steve. I got in the DGAZ yesterday at 411. It's a long position. I'm wondering what your thoughts are short term in natural gas. So DGAZ, just want to make sure. because it could be long, but it could be a inverse. I just want to see. It's a velocity share 3 times. Yeah, it is the inverse. Okay, so Tom is anticipating that natural gas is going to go ahead and turn lower. So the question was, what are your thoughts short term for natural gas in UNG? Let's just go ahead and answer the question by taking, like, if we can, Tom, by just looking at the current natural gas contract out there, and then we'll eliminate the confusion of what UNG shows us. So as we take, so with regard to natural gas, by the way, and boy, all you folks up in the Northeast, do what you can to stay warm. Basil was saying was zero degrees this morning. Yikes. It's a wonderful thing to be in Florida. If we take a look at the natural gas, though, we can see that it formed a nice little Tom DeMark 9 count out here on December 8th, moved slightly higher the very next session, and then gap to the downside. Again, this is the January contract. Is it January or is it March? Which one is natural gas trading right now? Is it January, guys? Let me know. I think it is January, but yeah, I think it's January, if I'm not mistaken. And then what we saw was price go ahead and gap down. December 12th, close below that oscillator and change line. So what this says to me, Tom, is that there's more of a move lower that should occur inside natural gas. Where should it fall back to? I'd say right in between or right around these little red dashed and green dashed lines are where I'd be looking for initial support in the 320-ish range, 316, 320. That is what this set of tools describes to you and I as what could occur out here. Now, if we go take a look at what is natural gas doing, we're going to look at the, again, at the January. No, we're looking at February now. So I might have had the – that's okay. This will work out here. So this is the current contract that's being traded. But what this is important because what we're going to be taking a look at here, Tom, are the market profiles. And what we can see that has occurred thus far, there's really two things that we know. One, the gap down that occurred on December 12th, that's a breakdown area, just as if we were going to flip it and take a look at a breakout area, that was tested yesterday and rejected. So that tells us $3.60 is a significant area of resistance. Price moves lower. It's been moving lower, moved lower even earlier today. But right now, the key levels to watch are $3.45 because that is our TAS daily profile low. That would be a logical area of support. And if price closes underneath that, a logical area of support is gone. Now, I gave a area of about what was it? It was around the 320 mark. So in the February contract, it's going to be slightly above that area. But I've given you a range to look for. What this chart suggests to you is that that price could fall all the way back into the weekly TAS profile high of 313. So far, so good. Now, let's see here if I can find I've got to switch system or switch workspaces because you asked the question about short term. So we really should answer the question about short term. That's not the space I wanted. I wanted this space right here. So let's go take a look at a 30-minute chart out here. Again, this is the January instrument that I have. Now there's the good news and there's bad news out here. If I could actually find it. Here's just simply the news, right? Is that right at about 6:30 this morning, you'll see the little red 13 count out here. That was a Tom DeMark combo count. And oftentimes the market this is short term now, oftentimes the market will reverse in that area once that forms. Now, the market actually did reverse. The very next candle session, right, in a nice little piercing candle, price went up, tested its TAS 30-minute high, rejected that level. Price came down, so it said there was your trading range. Price made a little bit lower low at about 9:30 this morning. The bulls rushed right back in, brought price right back into that TAS market profile, and then price was able to actually break above that area. So what could be setting up here right now, Tom, on a 30-minute basis inside of natural gas is going to be an A to B equals CD to the upside. So how do you put that together? Now what that could do out here, that could give you a move. That would be setting up a Gertley sell pattern, folks. That would take you into the 345-ish, 347-ish range out there. I'd probably go with the latter. Because the retracement here is only a 50% retracement. So here's how I would go ahead and play that, Tom. What we would take a look at is you would want to go back to your daily chart and watch this price level of 3.454. That is on the February contract. If price stays below that, I say you stay where you're at out there. And that, because I don't know, well, I guess you did tell me where you got in on the DGAZ, but I would pay attention to that and that only. Now, just for your purposes, I'll go ahead and put DGAZ up here. It's going to go ahead and populate with the market profiles, but in my opinion, they're just not as significant as the ones that we just looked at out here. So if you're watching, you can just look inside the data box and see the daily, which are blue, and the green, which are the weekly levels. So that's our take on what's going on inside of natural gas. We've got a question that says copper tone. For those of you that are in Florida this weekend, you might want to put on copper tone because of, the amount of sunshine that we get down here. No, it was Copper Steve was the question. Can we take a look at copper? And we most certainly can. So if we're going to take a look at copper, which we are, we're going to be taking a look at what the March contract for copper out here. And as we take a look at it, we would just mention with regard to it is wonderful, Danny, how you just seems like how did you do that? Ask at the appropriate time, because it's just a segue right into, in essence, what we were just speaking about. Now, you might say, what the heck are you talking about? Well, what we're talking about is you'll see the numbering on my charts out here. You'll see black, red, and blue numbers out here. We talked about the TD combo count, which, by the way, inside of high-grade copper formed right out here on March the 10th. Remember, that can be a significant signal out there of a reversal. Very next day, huge, and I do mean huge, shooting star. Shooting star being the opposite of a hammer candle. That should be very bearish out here, right? But see, price never closed below Stevie's red line, right? Price never, that means the price oscillator never turned down. And that's very important because all that was going on here was a retracement in a very strong bull run out there. And price found support, tested it, said, adios, amigos, I'm out of here, but went on to form then a TD sequential count. And it did this back on December the 6th out here. So with regard to, hey, what's going on with copper, Danny, you've got a very significant indicator signal that took place on October 6th. And the very next day, price closed below the oscillator unchanged line. What does this mean? This means copper is headed lower. And we'd be watching for about the 246 level as far as where it may find support. Steve Rhodes with TFNN. Be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Now, just to finish off high-grade copper here, the chart that I've got up on my screen, I prefer this chart with regard to showing you the market profiles. One, because I can show you both weekly and daily on the same chart out here. And that is really helpful. Remember, when we trade, we always want to know what's happening above us and below us. So if you're on a daily time frame, it means we need to know what's happening on a weekly chart, just like we want to understand what's happening on some intraday time frame that is helpful to you, just so that you can anticipate what the likely next move is going to be and where there's support and resistance. Now, in this chart here, what we can see is that copper has, in fact, pulled back, and it has tested its weekly point of control. Now, that weekly point of control, price where traders, both buyers and sellers, are most comfortable, can absolutely be a level of support. And in fact, in this case here, with the bottom of its box, again, you're looking at the green lines being closer to that point of control, that could be it for the move lower in that strong move higher out here. So you're looking at a real significant area, potential area of support at this 255.60. Any close below that, then 249 becomes your real buy area. If it fails, then it was wrong, because this box tells us, communicates to you and I, who's really in charge of this price area. And it is buyers that are, believe it or not, in control of this price area. The ultimate buyer, the better buy, is going to be closer to the bottom of the box. We're not there just yet. So be paying attention to where, and then you'd want to go down and take a look at, hey, what's going on an intraday chart out here. And I don't know that I have the March contract. Let's go see if I do. I might. Let's go see if we can find it out here. I do. Okay, so there we go. So we do have high-grade copper on this system too. I've got the March contract. Let's see if we can find out what patterns are in play on the short term. And the only pattern out here that I see right now is just an A to B equals CD to the downside. It would look like this if I were the one that was drawing it. And since I am, well, it didn't exactly pan out. There we go. There's your A to B equals CD. Now, it's made a 1 to 1.618 A to B equals CD. So, Danny, and I know you own a book of The Art of Timing the Trade. You know that there is discussed in that book is when you make a 1 to 1.618 A to B equals CD, the market typically does something different. 1 to 2, you can almost count on it. So, and we did get the bullish reversal signal with regard to copper here as we came on the air at 1 o'clock. So, you do have a pattern out here on an intraday chart, 30 minutes, that does does suggest that copper ought to bounce up to this 257 level. So I wouldn't expect that the point of control is going to fail during the day today. Tomorrow, or really Sunday, Monday, could be a different picture out there. So hopefully that's how we take a look at what's going on above us, below us, and that way it provides you with the information that you were looking for. Okay, another question that came in says, Mr. Steve. Mr. is my father, if he were alive. He still is, even though he's not, right? So, but you can just call me Steve or Steve-O. What Bill wants to take a look at is TGB. And the question is this setting up for the next leg up? Thanks, and have a great weekend. And thank you, and have a great weekend as well. So if we take a look at Taseko Mines, here's the information that we have. Number one, nice move off of the bottom out here, the bottom being October 17th, 2016. Runs from about, 42 cents up to $1, right? Close to $1. No, $1, exactly $1. Has pulled back. Now it's trading at 75 cents right now. I don't even have to do the retracement for you, right? I don't even have to do it because I already gave you, ran from about 40 cents to $1. But what we do know here is that it has pulled back to the 0.382 retracement level. Very close to it, which is 78 cents. We're trading at 75 cents as we speak right now. Now, that 75 cent to Rooney area is really important because, Bill, if in fact this is going to begin its next leg up, 75 cents should hold. Now, we just took a look at, and I'll go ahead and do this so that we can remove pricing data, because sometimes we don't need pricing data. And in taking a look at this daily profile out here, you tell me who is in control of this box, right? Look at that point of control at 78 cents. The bottom of the box is 75, and the top of the box at $1 out there. $1, Mortimer. So it is buyers that are in control of this level out here. So if you're not in the trade and you want to get in the trade out here, you most certainly can. And I would exit the trade if this thing really closed below the 75 cent area. Because if it closes below 75 cents, now you don't have to. I'll just let you know where price should head to. And where it should head to is this little gap out here from November 25th. And that level is 63 cents out here. But in all theory, price should find support right here. You don't have much in the way of volume today. You're down with about 408,000 shares. Yesterday was 614,000. The day before, 947, 1.2 million. You're going into a breakout candle that had 2 million shares, 1.95 to be exact. That was from December the 5th. So, if you're looking to build a position, build a bear, this is probably the time to do it out there. So that is on Taseko Mines, TGB being the symbol for that. We've got another question that came in as well. Let me get to that. That being from a phone number. Where will cut pull back to? I meant VIX. Where will the VIX pull back to? So let's go take a look and try to answer that question. So we've got the VIX index right now trading at a key level. Looks like it's probably trading right at that key level. That key level, by the way, being 1272. It's trading at 1265. So the answer to your question would go like this. If the VIX index closes below 1272 today, you have a 75% chance that the S&P 500 is going to be in the green. How much in the green? I don't know. But at 75%, would you like 75% odds out there? Now, if the VIX index closes above it, guess what? It's a 75% odds that the S&P 500 is going to close in the red. So 1272 becomes your nut. In asking the question, where can the VIX pull back to? If it closes below 1272, 1206 becomes the number. I don't know. 1206 would be the number that I would be looking for inside of the volatility index. So that I hope that helps answer that question. That was a pretty easy one to do. Boom, just like that. No long dissertation needed out here. Let's see, any other emails that have come in? No, nothing that I see. Okay, so let's go take a look at. So we covered a number of things. Right? It's kind of like it seems like it's always the same, right? It's just the same patterns. Look at these are patterns that are important. They're important for you and I to pay attention to, and so therefore we do. If I take a look at the summation index, if I take a look in essence at the advanced decline oscillator out here, the oscillators are all above zero. That means buyers are in control of the New York Stock Exchange, the NASDAQ Composite, and the Dow. And we really covered the S&P. When we look at the S&P 500, what we go ahead and take a look at is the VIX index and the correlation between those two out there. So so that's that. Hey, we've got a caller on the line. I believe we've got John from Philly. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Excellent, Steve. Looking forward to your holidays, are you?
I am. I didn't realize we're getting ready to go into a break. Can you hold on, and we'll go right back to you as soon as we get back?
Be happy to.
Okay. Dow's off 18, S&P down 5. We're going to take a look at the S&P 500 when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So as we finish off this show today, we're going to go out to John in Philly. We're going to actually take a look at the Wilshire 5000 to begin with. So, John, I know you've got some observations on this that you'd like to share with listeners. So take her away.
Yes, thanks so much, Steve. And by the way, good holidays to you. Starting tonight, actually.
Thank you.
Steve, when I assess the U.S. stock market, I always start with the Wilshire 5000. That is a market cap weighted index of over 3,500 individual stock names domiciled in the U.S., and therefore every other index that we look at that's populated with U.S. stocks is merely a subset thereof. Anyway, so I do that, and every once in a while I get unique observations that are just subtle, and I'm always reminded of the word subtle in reference to Basil Chapman, who, in doing his work, can often find very subtle little clues that mean something. So I'm sharing one with you today that may mean something, and of course I don't know. Time will only tell. What I share is this. The Wilshire 5000, looking very much like the S&P 500 and the Russell 3000, had rallied since that November 4th bottom, I think that was that Friday, and rallied into a Tom DeMark sequential sell signal on Tuesday.
Yes.
And that's identical to the count on the Dow and the S&P 500. What's unique, however, and just subtly different, is that the close Thursday, yesterday, on the Wilshire 5000, gave a close. This is Tommy DeMark's rules now. He invented this, so I'm essentially lifted this technique from him. Actually, he made it, put it into the public domain, so we're free to use the technique. But a confirmation of the sequential sell was given Thursday, yesterday, with that index, the Wilshire 5000, closing lower than the close 4 days prior, which was last Friday. So we've got a sell signal, we've got it confirmed, and from a trader's perspective, the way I use this is to say you put on a short and you stop out if you go to new highs, which is just over Tuesday's high. So I wanted to share that subtle idea with you. I know enthusiasm via mutual fund and ETF inflows has gotten very bullish. Does that mean a top is formed? Of course, only time will tell, but it's certainly reminiscent of pretty optimistic sentiment. So maybe this is signaling a turn. Just wanted to share.
No, that's great. And folks, so, to summarize a little bit, so what John mentioned was the TD sequential 13 count. And that you can see right here. If you watch us on Tiger TV, you can see how that formed on it's a blue number, the blue digits on my screen, how that did, in fact, form on Tuesday. You'll notice also here down at the bottom that John had mentioned back on November 4th, that was a TD setup. 9 count, which often can also be a reversal level. Now, the key here with that 9 count, just as I also believe is a key with the TD sequential 13 counts, is price being able to overtake that oscillator on change line. In other words, the price oscillator is either turned up or it has turned down. And in fact, that's exactly what occurred back on November 8th as the market opened up and then closed above that red line out there. So even though, and I will just share this with you, this is my observation, John, even though we do have, and because we really looked at this with regard to, I think it was natural gas or copper, I can't recall which chart, where we receive similar signals. But until we see a close below that oscillator on change line, which right now is 23,595.73, I'll go with a neutral signal versus the all-out bearish one. So hope that helps you as well. And hey, happy holidays. You bet. Happy holidays to you. Folks, stay tuned. Our polar bear, David White, will be up next. Have a great weekend, a safe weekend, and we'll see you on magnificent, marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.